Hello guys, it's Max here from Daily Market Movements, and just before I start today's video I just want to remind you all of the signal sale that we currently have live on our website. If you do want to take advantage of that sale, you can do so simply by visiting our website at www.dailymarketmovements.com. However, in front of me is the S&P 500 futures chart, and as you can see here today, we haven't really done much. We've just been trading in between 3,725 and 3,735. So I think we're just digesting the gains here. You know, the S&P 500 has had a fantastic year, especially considering the circumstances. You know, businesses have done very, very poorly, but thanks to the Fed injecting so much capital into the financial markets, we have actually had a fantastic year. So hats off to the Fed. The Fed has done very, very well to prevent a massive market crash, kind of like the one that we saw back in March, as you can see when we did trade as low as 2,240. What a rebound we've had, and now we're in a new bull market. You know, we entered a bear market back in March. It was probably one of the shortest bear markets we've ever experienced. But now we're back in a bull market. We're trading at all-time highs. And if you would have told me back in March that we would be trading where we are, I would have probably said that you're crazy. But you know, the markets are always right. You never argue with them, and it really is fantastic for many traders out there who would have been really, really scared back in March. But it's great that their portfolios have now recovered and they're making money. So technically, we're looking very healthy here on the S&P 500. Fundamentally, we're looking very good going into 2021. I do expect the economic data to improve dramatically. So I am bullish here going into 2021. I think January we will see really, really strong earnings, which will help the S&P 500 and add fuel to the fire, and see a significant rally here. Going into tomorrow's session, you know, I don't really expect too much. We could even see us trading in a red ever so slightly, as it's the final day of the year. So what tends to happen is that hedge funds and banks trim their positions and reopen them back in 2021, so that they can show their clients their tremendous portfolio and tell them how much money they've made, hoping that their clients will then re-inject more capital. And then of course in January, that's when that capital then gets re-injected, and that's why January historically is one of the most bullish months in the stock market. So I'm a buyer here in the S&P 500. I think if you sell this indice, you will lose money. It really is as simple as that. Going into tomorrow's session, I'm hoping that we can go and target 3,800, but I wouldn't be surprised if we do trade towards the downside ever so slightly.